Good morning, guys. Welcome to another video. Um, Today is Friday, the 18th of April. So let's do a basic weekly breakdown. So this week we took two trades. One is still ongoing, which was NZD Chef, which I took on Monday. Beautiful buy. It's still ongoing. Another one is Euro JPY. Excuse me for the Wi-Fi, it's very slow. Another one is Euro JPY. Euro JPY massacred us, like took us out for stop loss pronto, like ASAP, just took us out. So this is the NZD card. But at time we're aiming for this level. At this level now we're going to sell. So that's it. Then we took one here. What prompted me to take this trade is because I was seeing some bullish action, but that's not what happened. Seeing some bullish action here. As you can see, this is a high. This low came and broke this high. I drew my Fibonacci on this zone. I drew my counter trend line here. Counter trend line got broken. Once my counter trend line was broken, I waited for my extra confirmation, a bullish 4-hour candle to form inside. I did that, put my stop losses here, aimed for 1:2. Bruh, we're out, out. So, but it's my fault though, it's my fault. I'm trying to buy on a level where it has to sell, so it's my fault basically. But that's not an issue. We'll bounce back from it. It's not really that crazy. So trades that I'm looking at next week, I'm looking at Euro USD. Okay, Euro USD, looking at AUD looking at all the USDs, trying to understand what's going to happen next week. It's a good zone that we can come back into and buy from. And this zone now has me a bit skeptical. I don't know if this zone is a zone from previous price action. It's from like how many months before, like a year or two earlier. You can see how prevalent the zone is. So that's why it came and reacted to it. So I've been looking to short from here since, but there hasn't been any clear indication of any way to short actually. A clear way to short. So I just keep on waiting. Now we look at GPUSD. GPUSD. Okay. I'm also looking to either short or long GPUSD, and there are multiple reasons why. Takes time for all of it to build up. Okay. Clean. So I'm looking at, if we get to this zone, we might need to short. That's what I'm really trying to see. But for now, let's just see. If we get here, while we change of character to the downside, we short. All because of historical price action. We look to the left, we see this level. If you go on higher time frames, you'll notice that this level was a level that created a lot of bearish candles, a lot of momentum to the downside. And where there is momentum formed like that, there are a lot of orders still there. When it gets there, it might sell. It might still buy, but it might sell first. Because it's an untouched zone. When zones are not touched like this, there's a lot of selling potential there. And if it sells and gets here, it might buy back. So we just keep our fingers crossed. But the general idea is to have the market direction, because an issue is the market direction, and it's not even issue now is no more strategy. Issue now is the market. What does the market? How does he want to move? How does he want to move exactly? That's the thing. How does he want to move? That's it essentially. I'm just looking out for next week's trades. This NZUSD. NZUSD. I'm waiting for a buy on NZUSD because we have come to one of those zones. We sold a bit. We have broken out of that zone. Let's load up. Broken out of that zone completely. I'm looking at buy. So I'll see if it breaks my counter trend line and the call. Enter for a buy. Okay, this is the level. If it enters my, it's already entered into my fib level. We're going to enter for a buy, and our targets are up here. This is another zone. What I drew here is like a minor zone. It's like a zone that has potential, but the zone has been touched many times. So the general idea is that these zones have orders on them, institutional orders, and when price comes into the zones, it grabs some of the orders, and that's what so these are orders from individuals that have a lot of money, or institutions. It grabs the orders and sells, grabs the order, sells, grabs the order here, so very aggressively. So I could have easily taken this. It's a beautiful trade, just taking that. Waited here for like confirmations on the 1 hour break of structure to the downside. It wasn't even structure, she just came in here and just sold, just dumped massively. So as those orders have been exhausted, what do? We move now upwards. We can break that zone now because it has been exhausted. That's why fresh zones are very important. Like this zone down here, if it rejects it and comes to this zone, I'm buying because if you have fresh orders here. So let's see what else is there. Is AZUSD. Then I will look at the JPY pairs. AZUSD is about the same thing on that buy. About the same thing. So if it buys, I'm expecting us to buy right up here. If we sell, I'm expecting us to sell right down here. Then let's see AUDJPY. AUDJPY. AUDJPY, I was expecting a buy. I'd seen this buy since. The issue now has been was to take it. I was already entangled, and it would have been preferable to take this than to take EuroJPY that kicked me out. I saw these things, only was just like this. Wow. It was just like this. When did this happen? I think it was on Friday last week. So, giving 1 is to 4. Like that. So you see, I'm taking something like this. A good trade. Come down. Let's see, chef. This is sell. Because we're in the zone that had orders to sell. So I'm waiting for this zone to be broken. Let me see on the 4 hours. On the 4 hours, if I have bearish candle break here, we can sell. Right. And that's GBP, JPY. And this was a buy. Yeah, buy into this level. Buy into this level. GPY. Sell. This is buy. But once it gets here, we're going to short it. This is another thing I saw that I had to take since. But it didn't have the pullback that I wanted from it. That's the issue. A lot of times there are a lot of good trades, but they don't have that pullback. And the way to can I say mitigate? A way to make sure that you don't do this kind of trades is with this kind of setup. You draw out from where structure was broken. So where it stopped breaking, where it started retracing back in, draw a counter trend line and you wait for a 4 hour candle break. Then if that break, like this break isn't significant enough for it, you will have flops in the candles. It will be now outside. It's a candle that formed outside. We enter here. Good stop losses here. 1 is 2 clean. So that's essentially it. So we messed up on that one. Messed up on that one. So USD JPY. coming to this level, I'm expecting a buy back up into this level. So that's basically it. Basically US 30, I'm expecting buys, but I've come to this institutional level, others have been taken. That's why I had this very aggressive bullish went to the upside. If it goes to go far up to about here. Here, then from there we'll see where we go. The same thing with S&P 500. Gold is an interesting one. Gold is an interesting one. Gold is a bit more complex because to draw out these zones, it's like a lot of criteria, and gold creates these zones like every 2-3 days. It creates a zone like this. So I'm just waiting. But this seems more legit to me because I feel like if I was a buyer of gold, I would be like, oh, when gold gets 3K, I want to buy some gold. Why would you want to buy at 3K? 3K is a round number. When you look at something like psychological levels, you understand that okay, round numbers have institutional orders around them. So look at a round number in the middle of my zone. Clean. So gold could just melt all the way down here. But now how do we capitalize now on that melting all the way down here? So a lot of questions. But we're gonna see what's gonna happen. We're gonna see. Okay, thank you. Next time.